The age-old question, houses versus townhouses versus units. In this video, we're going to be breaking down the differences between these options and talk you through why Emily and I chose to start with houses and have recently purchased a uniblock rather than individual units. Now, to be perfectly honest, there's no one-size-fits-all answer here. There's no situation where for one individual, houses might be the right fit, townhouses might fit another investor, and units might fit another investor. There's so many factors that come into making an asset or an investment decision. The biggest starting factor is probably budget. So depending on your budget will depend on what asset you're actually able to buy. Now, in my opinion, houses have stronger capital growth potential. This is because they control a larger amount of land, and land is what is scarce at the end of the day. We can recreate the same type of house in any situation. If you've got the money, you can pay a builder to create your neighbor's house and plonk that somewhere else in Australia. But you can't recreate the location. The location cannot be changed. That specific lot in that specific street or that view in that location at Bondi Beach cannot be replaced in certain situations. And so this is where location and budget go hand in hand in terms of determining houses versus townhouses versus units. So if you're on a limited budget, you're more likely going to be looking at units and townhouses, which have a higher yield because they have more building component relative to their land component. For example, you could have one unit in a block of 10 units, and you could have one townhouse in a block of 4 townhouses, or one house on a similar size block. And this goes to show that one house controlling that same parcel or size of land has a stronger land component, and that's why you're generally paying more for that property, as opposed to a townhouse or a unit, which control less of that overall land parcel. So on screen, you can see the last 30 years of data from CoreLogic around houses versus units, and it also compares Australia, the combined regionals, and the combined major capital cities. Now, I think this data set is very telling as to the trajectory of houses versus units over a long period of time. You can see the combined capital houses and unit values over 30 years to July 2022. And you can see that houses median price point is at $928,000, and you can see the units are sitting at $636,352 over that 30-year period. Now, the interesting thing is between 2002 and 2022, the disparity has grown larger between houses and units. This could be because Australians love houses. We love our space. People want their own parcel of land. They want their castle, and property is an owner-occupier driven market. I know on the channel, I'm an investor. We also own our own home, and probably you're consuming a fair bit of investor or real estate content. But you need to recall and remember that property is driven by the owner-occupier market. And so if the demand is going to continue to increase for houses because that's what Australians want, that's where property prices are going to increase over that long-term period of time. Now, the interesting thing here, flicking back to the data, is you can also see the combined regional house and unit values over the 30-year period as well. You can see that units actually pushed above house prices in around 2003. But since then, houses have continued to extend and push away in terms of median prices when comparing houses and units. So the long-term historical trends are showing that housing is outperforming units over the last 30 years, both on the major capital city front and in the regional locations. So does this mean that there's more opportunity now to buy in the unit market given that there's a greater disparity? Or should we stick in the safe as houses scenario with houses outperforming units and townhouses over that long-term period of time? For me, it comes down to your individual strategy, your price point, and what you're looking to achieve. If you're looking for capital growth and you want to invest in the market for the long term, then the housing market, in my opinion, over townhouses and units seems like a better asset selection to buy and hold over that long-term period of time. If you're looking for stronger cash flow and a lower price point, as well as growth potential, then maybe the townhouse and unit market might suit you. So when it comes to houses, in my opinion, you're looking at more capital growth potential, a stronger land component, and ability to add value to that dwelling. When we're looking at townhouses, you're getting the mix of townhouses and units. I'd be looking for locations where there's not more than, say, 12 to 20 townhouses in the complex. I also want to have a large townhouse, so ideally 2 or 3 bedrooms plus. And again, personally, in my portfolio, the ability to add value is crucial, generally through cosmetic renovations. Then when it comes to units, there are buying opportunities. given that there's lower price points and given that there's more disparity between houses and units at this point in time. So I'll be looking for high yielding units, which are generally in blocks of say 8 to 10. And I'd like the low story 60s or 70s walk-ups with the breeze blocks, because those properties have more land component. They're more scarce. They're a lot easier to deal with in terms of body corporate and won't have those high overhead expenses in terms of maintenance and ongoing strata fees, like maintaining pools and expensive lifts and those types of lifestyle expenses. So I'd be looking for a low story walk up with breeze blocks built in the 60s to 80s with the ability to add value. So you need to weigh up these options for yourself. Look at your ability to access debt, because that makes a big difference as to whether you can buy a house, whether you can buy a townhouse, or whether you can buy a unit. And then also weigh up the growth. Do you want to focus on capital growth? Do you want cash flow? Or are you looking for a mix somewhere in the middle? Now, when it comes to property as an asset class, you're not really looking to buy property for the next 6 months or the next 6 years. You should be looking for that 10-year plus horizon. And so when it comes to the strategy of buying houses or units, Emily and I have actually dabbled in both. We started growing our property portfolio through blue chip assets, which we could add value to. And then we started to push for cash flow opportunities. This is how Emily and I jumped into a unit block purchase. We were actually considering buying individual units at one point and, spreading our risks and diversifying. But after seeing the benefits you could get from buying an entire unit block by controlling the entire unit block and not having to deal with strata or those types of issues and being able to treat it essentially like a house purchase, that was the right decision for us in terms of the mix of cash flow and growth potential. The great thing about the unit block is you get the benefits of units in that they're smaller sized dwellings, we can add value to them, and they have a higher rental yield. You also get to control the entire land supply in that location. So we've got over 1,000 square meters, we've got dual street access, we could potentially redevelop the site down the track or live off the cash flow by paying down the debt slowly over time. Now, the financing for the unit block purchase was a little bit different in that we had to take on a commercial loan, which did require a 30% deposit, but we were comfortable in actually paying the extra 10%, paying 30% rather than a 20% deposit and putting more cash down because we really wanted to get into that asset class and use that debt to actually maximize our leverage and control a larger asset base. For Emily and I, it's been about finding the mix of properties that suits our portfolio to allow us to achieve our goals. Our original goal was actually to control $3 million worth of property in the portfolio, including our own home. And now we're sitting up around the $5 to $5.5 million mark. And the long-term goals might be to control, say, $10 million worth of assets. When it comes to selecting future purchases for houses, townhouses, or units, it's going to depend on the cash flow that we're looking for and how that property fits into our long-term strategy. If you'd like to discuss your property investing strategy, then head over to purposeproperty.com.au to book in a half-hour free strategy session with myself. We'll chat through both your short and your long-term goals and our process as buyers agents buying here in the Brisbane market. Given the higher interest rate environment we're in, if you want to hear my thoughts on how I would tackle starting a portfolio from scratch today, click this video over here. Thanks for sticking around. I'll see you in the next one. Peace.